Good morning, good morning, good morning, and finally the day is here. Welcome to the Introduction to Governmental Leasing webinar. It's great to be here. Finally, we can have these conversations with different people from government, from fleet management, and from different areas of the industry. And please let us know where you are joining us from. There's a chat section. Would you kindly let us know where you're joining us from? Which country are you joining us from? Which industry, which company, which government ministry would you like us to, where are you joining us from? So we really appreciate that you could join us. Thank you very much to the panelists. I can already see they're here. I can see they are ready with what they prepared for us. We are glad that you could join us. Thank you for registering on time. You people are awesome, awesome, awesome. And I believe we are going to have a productive meeting today. This is a webinar, and so we ask that if you're not part of the panel and you're not going to be speaking, kindly mute if you've already not muted you. We ask that you use we have a Q&A section. I know you can see it on your screen. We have the chat here, but we also have the Q&A. We prefer that you post your questions on the Q&A section. And if you need to chat, we can then chat on the chat section. But please post your questions on the Q&A section so that we can have our panelists answer them as we go on with the webinar, because there are many and the time is not enough to answer all of them, but if you keep posting them, the panelists are going to be answering them as we go along. So housekeeping, kindly let's cooperate, ask your questions. Whichever it is that you have, let us know what you think. Exactly, where are you coming from? What are you struggling with in this leasing industry? And then we are going to have different activities for this webinar. We're going to be having a surprise raffle gift right now and in between. And then, of course, we will have a quiz at some point. Alex will be assisting us with that one. And then, of course, we are going to have certificates at the end of the presentation. So this is good, and it is a wonderful webinar. Thank you very much for registering. And so you're welcome. I can already see the questions are coming in from the, at the Q&A section. Kindly keep posting them. And also let us know where you are watching this from. We really appreciate that. And so welcome to the webinar today. I would like Alex to help me with the next section. Alex, please. As you can see on the screen, we have a surprise. And round one, gift voucher winners, you already know yourselves. Shem Nyaribari, congratulations. Mary Ogola, congratulations. Amos Bitok, congratulations for winning. Imagine on an early morning on Tuesday. This is really good. So you're going to get communication from Toyota Kenya where you'll get your gift vouchers. But congratulations. This has started well for you and for us as well. So there we go. I hope you can see your name, and so that you await to get where you are going to pick your raffle ticket from. So fantastic, that is amazing. I would like us to start this session. We do have quite some material to cover. But before then, I just want to say this is to prepare us so that we can know each other in the industry. We can know each other with government, representatives. We can lobby a few things. We can have to, we'll ask the questions we've not been able to answer because such a thing has not happened before. So this is the right place. And so today I would like to introduce our panelists. We have Robert Nyasimi, we have Peter Wanjala, and we will have Alexander at, a few moments from now. And so those are going to be our panelists for the day. And so I would like to introduce our first panelist. He has something he has prepared for us so that we learn from him. He's, you know, he has something to say. And Robert Nyasimi will start us off. And I want to read a little bio for Robert. Robert is a director and group CEO for Rentco East Africa. I mean, if you are in the transport industry, you know Rentco. He is a pioneer and former chairman of the Leasing Association of Kenya, LAK, and has leveraged his expertise and experience in asset management to grow leasing business in Kenya and across the region. He holds MSc Marketing from University of Glamorgan, UK, Postgraduate Diploma Marketing, UK, Advanced Diploma, UK. Robert is a trained credit and risk manager from Kenya School of Monetary Studies and a registered professional with Associate Kenya Institute of Bankers. He has over 25 years of hands-on experience in people management, asset finance, business development, sales, and contracting. Previously, he served as general manager at Rentworks East Africa Limited and a consultant at International Finance Corporation, that's IFC. And he's also served as a deputy head of asset finance at Barclays Bank of Kenya, what we call ABSA now. And so from his bio and from his short profile, actually, we really tried to shorten that profile. You can tell we have the right panelists in the room. You guys bring your questions, bring your concerns and bothers. Robert is the best person to address this. So Robert, you're most welcome. Could you kindly give us what you've prepared for us? Robert, unmute, please.
Yeah, Betty, thank you for that very elaborate introduction to the person of Robert and Rentco, the company that I represent right now. As you've rightly said, Rentco is an independent leasing company. And just to make these discussions going forward, we work both in the public and the private sector, but this webinar being about government. I would just try and limit my government. So being an independent company, we are able to interact with government in terms of logistics, where we're able to lease motor vehicles like the police car. I know my fellow panelist, Wanjala, will mention that. We're in the energy sector. We are currently undertaking leasing of power plants in collaboration with KenGen. We are in agriculture. We are able, the government can do farm mechanization for value chain, especially to meet Vision 2030. When you look at oil and gas, infrastructure around the pipeline, all that will be driven through leasing. Aviation, KQ and all these major airlines owned by government, they acquire their aircraft through leasing. In mining and mining and manufacturing, so including even in health and where like the medical leasing that happened, despite all the challenges, but that is a form of what leasing can do to an economy. So in the Kenya market, out of all the loans that were extended by the banking sector last year, about only 2% you can say was related to leasing, which is a very, very small percentage and shows the potential of what is in that space, because markets like in America, which are very developed, to get leasing is about 60%. So there's still a lot we can do. Of course, the government was a big player last year when they have leased vehicles of over 3,000 cars. In this current year, they provided over 8.1 billion to acquire cars for the next financial year. So there's a lot of activities coming from the government. And then some of the reasons that government lease are totally different from why private companies lease. And as you know, government are in spaces where they provide services to the citizenry and they're not in the business of owning assets. So as a government, if you have the equipment to provide the service, is better than owning the equipment upfront. Also, leasing allows government to front load future budgets, meaning they're able to access more equipment now. And that's one of the advantages of leasing. One of the things that when government and government agencies move into leasing, as I said, it leads to capital formation in the economy. As more assets are procured by the government, when you procure more equipment, for example, when government takes more vehicles under lease, and had they bought, they would have bought less. It means the government will collect more excise duty, more import duty, more VAT. Those leased cars will encourage the likes of Toyota to invest in more assemblies and even contract more maintenance centers. Those centers will employ people. So you see the multiplier effect that leasing has in the economy. So that's why we say for government, leasing results in capital formation in the economy. And then through that capital formation, leasing opens up the country, because as government now has more assets to provide to its citizenry, it means, Northeasterns, police vehicles are there, and Toyota has to open a service center there, which helps in opening up the country that was not being accessed to. Then finally, if the lease is structured properly and you sign with the National Treasury, then there's no need for sovereign guarantee. There's a move by most African governments to come out of this issue of giving sovereign guarantee to when they receive loans from international international lenders or commercial banks. And that really helps, because even in Kenya right now, to get a sovereign guarantee, you have to go through a parliamentary process. But if the lessor contracts the National Treasury, then there's no need for sovereign guarantee. And since leasing is a form of credit, it's easier for government to get credit facility through leasing to get equipment than had they gone the loan process, which makes it very easy for government. Areas of growth. What are the opportunities of leasing in Kenya, especially to government? One of the things is there are certain prevailing tax regime that currently does not work for leasing, and this is one of it that I've identified is called the fringe benefit tax. This is a personal tax that whoever is using a car pays as part of his pay as you earn. Currently, it's charged at 2%. It is 2% if you bought the car, and if you lease the car, it is 2% of the leased cost. So when you compare 2% of the value of the motor vehicle, for example, if a car costs 1 million shillings and you take 2% as the taxable, as the fringe benefit tax, that comes to 20,000. Then you pay corporation tax at 2.5%, 25%, that comes to about 5,000. But a similar vehicle costing 1 million, you lease over, say, 3 years. When you put interest and probably insurance and maintenance, your repayments will come between 30 to 35,000 per month. So when you take 2% of that, then you'll get the fringe benefit tax to the individual comes to 7,000 or 8,000 to that individual who is making that decision. So fringe benefit tax currently is not working in favor of leasing. Then the other thing that the government can do so that leasing can grow in the country, we have this act called the Movable Property Security Right Act 2017. It is being operationalized as we speak, but more activity and more awareness is required so that if lessors can feel secured and their assets are registered and under the act, then that can actually increase the growth of leasing in Kenya. The other thing that the government can do, they can undertake timely payments to lessors so that this gives comfort to financial institutions to actually increase or fund the leasing companies on better terms if lease payments are predictable. Then the final thing is that we've always talked about if Treasury can do lease management units, a centralized lease management unit within Treasury. Of course, there's discussions around that. When this system will be set up, it will standardize and give guidance to all the entities in government. Finally, the other thing that the government can do is to encourage leasing to SME, especially on a value chain process. So in the milk sector, if you look at the milk sector and say, you know, for us to achieve a certain outcome out of our dairy industry, this type of equipment is needed on this value chain. And if there's partnership with private sector, then that can actually enable the government to achieve their Vision 2030. So with that, my presentation ends there, and I'm open to any questions. Okay. Over to you, Betty.
Right. Thank you so much, Robert. Thank you for the introduction to leasing. We now understand it. Most of us heard about the Anglo leasing, and that was the first time we heard about leasing. But of course, as you kept educating us, it's growing, I mean, in different sectors. And so at this point, I want to welcome Alexander and say good morning, but I'll tell you at what time to talk. So thank you very much, Robert. We appreciate. Kindly to our participants, we are already at 1:29. Kindly use the Q&A section to tell us what is it that you're struggling with, what are your concerns, which question can you ask Robert now that he's had his presentation. And I want to appreciate a few people who are joining us from different parts of the world and different parts of Kenya and different companies. Ruben from Standard Group, welcome. We've got, I saw a lot of people joining us from Kenyan. You're welcome, guys. Thank you for joining us from River Cross, Virginia. We have Maina joining us from Katine Technical Institute. We have someone joining us from Kenyan, that's Mustafa. We have people joining us from NCBA. Thank you, David Kisa, for joining us from NCBA. We have Timothy joining us from Kenya Film Classification Board, people joining us from travel industry. I saw someone joining us from Kigali. And now we have a lot of people joining us from Beira, East Africa. Thank you, guys. Thank you for the companies who have registered their members. We really appreciate. Thank you for joining us from Toyota, Rebecca. I can't read all of them, but at least I appreciate those few. Francis, thank you for joining us from Kenyatta University Teaching, Research and Referral Hospital. Of course, we do have a lot of people joining us from different parts of Kenya, from different parts of the world. Someone was joining us from Dubai, but I'll try and look for their name at some point. So thank you, guys. Keep joining. That's Lalit Damija. Thank you for joining us from Abu Dhabi. We really appreciate. And so at this point, I want to encourage you to keep asking us questions. I'll keep giving the panelists time to answer that. Alex, I would like you to help us with the e-certificate quiz at this point if it is ready. And then we can proceed to the next panelist.
Sorry, the quiz is at the end.
All righty. Okay, that's fine. Okay, so at this point, I want to welcome Alexander. Alexander, you are welcome.
Thank you.
No worries, we have you here and we really appreciate. Actually, we were looking forward to hear, what we can get from your experience. Robert took us through a great session. And so we'd like to have Alexander take us through his presentation. Alexander George Owino is a banking and financial sector specialist with vast experience in policy development, implementation, and monitoring and evaluation, that is M&E, in the banking and financial services sector, including as project implementation support manager for the World Bank and National Treasury. At the Treasury, he championed innovative initiatives and financial sector reforms, including developing the technical aspects of the Treasury's first vehicle leasing program for the government security agencies. He is a seasoned accountant and financial analyst with over 35 years experience in auditing, financial management, consulting, and senior management in the public and private sectors. His areas of expertise include financial planning and modeling, analysis and evaluation of accounting and financial systems, specifying and implementing computerized accounting systems and office productivity systems and tools. And so at this point, you know, we've got the right man in the room, 35 years of experience. We are here to learn. And so Robert, the floor is yours. I mean, Alexander, the floor is yours.
Thank you so much, Betty. And thank you, Robert, for standing in for me briefly while my challenges of ICT were being resolved by your able Alex Munene. So welcome, participants. This is a very exciting day for us, both our partners, SBS, Rentco and Toyota. I'll be very quick. Mine is the easy part. I'm from the primarily the leasing side today. So let me first start with the myths that we all have about leasing. And the first myth we have is that leasing is not convenient and it's not the cheapest way to get vehicles. That is not true. This is a big myth about leasing. Leasing actually gives the best value in terms of efficiency, effectiveness, and economy. Remember, if you are in the public sector, you're about results. The other myth we have is that leasing is not for everyone. Leasing is actually for everyone, but especially the very large fleet managers. They're looking for economy and value. They're looking for efficiency. They're looking for managing over the asset life cycle. They're looking for the entire way they can use an asset to generate services, service delivery. The other myth we have is that leasing is not it's so expensive. Let me just pay cash for the vehicle. Again, when you look at the carrying cost of a lease, the carrying costs of a lease are very simple. Simply take the list price, deduct a residual value, normally about 85%. That is the value you will use. So in leasing, you only pay for what you will use. We have another myth that leasing contracts are very hard to understand, they're opaque. That is not true. All the leasing contracts disclose all the terms that you need so that there's nothing that is hidden. A further myth is that leasing is just another way of procurement. That is not true. Leasing goes beyond procurement. I want to be very clear on this. Leasing goes beyond procurement. In fact, in the US, the law for leasing that GSA Fleet follows, it sits in a property act. It sits in a property act, not in a procurement act. Then we also have this myth that leasing has a lot of hidden pain, things that, listen, my colleague Robert will kind of like fish out of the woodwork. That is not true. In fact, it's the asset you're leasing which has a pain point. You need to feel it. You need to manage it. You need to have drivers that are assigned to it with authority. You need to maintain it. You need to insure it. Those pain points must be addressed whether you lease or buy. So that in itself is not an issue to worry about. But let's get to why we're here now. How did government start? Where did this all start? Is this a fancy thing started by consultants like me and Robert? No, it isn't. Let me first introduce the players, then I introduce how we started the leasing process. The first player we look at is the lessee, which is like from the MDA side, us. The lessee is that consumer who actually contracts for the right to use an asset. The lessee is the one who starts the music. And he can do one or two types of leases. He can do a finance lease where he uses the asset for its economic useful life, or he can do an operating lease where he uses the asset for a very short time. I'm very happy that our able coordinator shared my presentation with you, so you can allow me to skip over some minor points. So the lessee starts the process. He is the customer. He is the person going to use the asset. We then have the other two guys, the other three key players. The lessor, like my colleague Robert Nyasimi, the lessor is the person who does the contracting. He is like the orchestrator of the music. The lessor is very critical to this process. Now, the lessor can come in three types. He can be independent, like Robert Rentco is independent. He can be captive, tied to the vehicle or the equipment vendor, for instance, Toyota Tsusho. Or he can be captive to the financier, the bank. I think in the old days we had people like NIC Credit, who then could be a captive lessor. Then we have the financier who finances the lease, typically a bank, but can also be a non-bank, can also be a specialized asset finance specialist. Then finally, we have the vendor, the person who sells us the metal. This is very important. During the leasing, we insisted this must be the manufacturer or the original equipment manufacturer or the dealer representative in Kenya, for instance, Toyota Kenya. Or you can even have a specialized supplier. If you are KQ and you are leasing a plane, you can either lease it from Ireland or go to the manufacturer Boeing directly. Just as an example, we are lucky that in Kenya, the large vehicle suppliers are actually represented here directly, like Toyota Kenya. Now, how did we all start this process? A bit of background, there's a method to the madness. It wasn't all knee-jerk. Sometime in 2006, the head of public service issued a circular for a new transport policy in the public sector. Then in 2009, we had the then Deputy Prime Minister, Minister of Finance, who is our current President, His Excellency. He issued a rule giving a moratorium on purchase of new cars. So no new cars. That 2009 was the year that he did the Passat, when he basically didn't like the gas guzzlers. That was the Passat year. Then in the next year, 2010, he then made a formal pronouncement in the budget statement. So from 2010, it is official. Government will lease motor vehicles from 2010. So it was a very, very long time ago, almost 10 years. Then we at the Treasury developed the official government transport policy. Myself and Eric Aligula of Kipra did all the draft technical part. We did also presentation to the Minister of Finance at the time, and we're ready to roll. I'm very happy that most of the participants here, including Robert, were participating in the process. We consulted them heavily. The Ministry of Finance has a special role to play, both policy advice and also the guy with the cash to pay for the lease. So we centralize budgets for transport within the Ministry of Finance. And then finally in 2020, my own head of public service, Mr. Joseph K. Kinyua, issued a circular saying that upon the success of the pilot phase, now we are going full throttle. This is now vehicle leasing on a whole of government basis. I repeat, from June 2020 is now policy, lease vehicles across the whole of government. So there we have. So we no longer have a lease or buy decision. It's been made by policy. Policy says you lease except in very exceptional cases, probably security reasons. The lease pilot phase was successful. I'm very happy to note that. The head of public service said it was very successful. During that lease pilot phase, we had support from the industry. I want to acknowledge Rentco here. I want to acknowledge Toyota. There were participants in that. I want to now today acknowledge SBS, Betty. You're helping us to build capacity in the industry, training MDAs. I want to also acknowledge fleet managers who took part in all that process. And also I want to acknowledge the banks that were ready to finance the leasing. They were falling over each other to finances. I think at the time I remember Coop Bank said, I'll finance the entire fleet. Give me 9 billion shillings. Then we developed an official leasing RFP. That is a document that makes the metal come to us. The leasing RFP, the most important parts of it is there's a leasing specific part in the contract on top of the general standard forms of contract. That is the most important part to note. There's a section which is leasing specific. Finally, why did we centralize budgets under the Ministry of Finance? That's the guy with the cash, the simple answer. But centralization is essential to leasing. When you centralize, you can have all core functions in one place. You can follow your official policy. You can have central fleet management. That's where now professional capacity needs to sit. We need to have a fleet management company right at the Treasury. That is the person who is the client now, who is the customer. Then leasing requires economies of scale. You need to buy a lot of cars need to buy a lot of insurance, a lot of maintenance. Economies of scale will drive down costs. Leasing also requires to be centralized for a very simple reason. The total cost of leasing needs to be driven down to as low as possible when we have large scale, large numbers. And I'm very happy that leasing helped us to do something very simple, reduce the proliferation of vehicle types. So when the then Deputy Prime Minister said, I only want one car for this function, that also lowers the costs. The good part about leasing is that it is still a method of procurement, so don't worry about it if you're an MDA. It is still a method of procurement, but we did our work. We ensured that the PPOA approved it. So it is an approved method of procurement, but it is not, it goes beyond procurement. As I mentioned before, in America, it's just the property laws. And then we did extensive consultations with the industry. This is a first for the Treasury. We actually brought the industry in to enlighten us on the best practices across the world. And I'm very happy we did that, because then all of them knew we had the best practices that we were using to lease. Let me look at our expectations, government expectations of leasing. What did government expect to achieve with leasing? And I start with the success that the Head of Public Service has mentioned. The pilot phase was concluded successfully, if I quote him. Principally, we had three things we wanted to achieve. One was efficiency and cost reduction. The other one was we wanted to ensure that leasing demand can stimulate growth of the domestic vehicle industry. Domestic vehicle industry, stimulate the leasing industry itself, stimulate development in the financial service sector, increase asset financing in the region. We also finally wanted to establish Kenya as a source market for vehicles, as an exporter of vehicles. So when we lease a lot, I hoped to attract our Toyotas to set up vehicle assembly plants. We already had one in General Motors, Isuzu, and we needed others as well. As I said before, we want the original equipment manufacturer or his dealer and representative in Kenya. We do not want third parties in that chain. So economies of scale come in. We need to generate new employment, boost the domestic market. So government had more than just procuring a service. They wanted also to get positive economic effects out of their procurement. And this is the fun part. What particular pain points did we have? What was the particular issue that made us do this? People with suits in that big house. I think the first one was the problem of rising costs of transport at the public sector without commensurate improvement in delivery of services. So your costs are going up and your service levels are going down. We had to put a stop to that. The other one is government had very ineffective procurement. Still today, that's still on. So I just challenge you, Betty, I want to challenge the participants. Anybody visiting a government vehicle yard today, of perfectly good cars. We also wanted to reduce the misuse and mismanagement of official government vehicles. And one of the most egregious examples of misuse is what we call vertical equity. The bosses have all the cars, the people who should deliver the service don't have the cars. That is not equitable in terms of service delivery. You must put transport services in the hands of those who deliver the service. That is our mission. Then there was very poor utilization of the fleet. Most cars are just parked, so they are underutilized. We also had, of course, bad practices like theft of spare parts and lots of ways of mismanagement. But above all, there was lack of effective fleet management of the asset. The asset starts from the user needs all the way to the disposal, the asset life cycle. There was very poor management of that asset life cycle, and we didn't like that at all. So those are the pain points we needed to address, and according to the Head of Public Service, they've been addressed by leasing, and your man is the lessor, the vehicle manufacturer. You must get onto the leasing bandwagon. Once again, I want to think of somebody in the room who is still saying, I still don't get leasing. I still don't understand leasing. Let me just buy a car. Just buy a car. If you still don't get leasing, I'll do this very, very carefully. The lease versus buy decision has been made by policy, and it is now a false choice. There's no choice to the matter. And that's the case in Australia, that's the case in Canada, that's the case in the US, where all federals lease through GSA fleet. So it's no longer addition you need to make. Then the key question when you look at leasing is value, efficiency, and effectiveness. Remember, the best use of time is not in metal. The best use of taxpayers' money is in service delivery. That's not in the public sector. In the private sector, the same thing. The best use of shareholder capital is in the core business of the company. If you're just brewing, if you're Safaricom, that's in IP, not in metal, not in investing in metal, even if you can do it cheaper, and it is not cheaper. Then remember that leasing has a cost advantage. You only pay for the portion of the asset that you use. If you're only using 85% of an asset, that's what you pay for. When you buy, you use the entire, you pay for the entire asset. Then remember, leasing is typically full of discounts in terms of volume. If you're a government, you may get up to 30% discount on the volume. You may get discounts on good residual values if you maintain them well. So you're probably paying about half the list price for an asset. Then within the longer presentation, I've given examples of how a county, Betty, can actually outperform another county by merely leasing instead of the other county buying. We give examples of that, and also give an example of, Betty, if you wanted a Land Cruiser, how much would it cost you to lease a Land Cruiser? Surprisingly, not much. I believe between 120 and 188, the big Land Cruiser that security services use, which is a very decent price, as opposed to paying 5 million today to buy one. You can immediately for a year, you know that by paying about $1 million, you already have a service you can deliver. So I want to stop it there, Betty, and give it back to you with just one reminder that leasing looks at value, cost effectiveness, and managing the assets over the life cycle. It is not, I want to buy something which is cheap. As a large fleet owner, if you're a parastatal, if you're a company, if you're a government ministry, you're a large fleet owner, we need to ensure these economies of scale are leveraged on, and we separate ownership of metal from the use of that metal. And I think with that, Betty, it's quite easy. We can go to the quiz. There's a quiz in front of you right now. 3 very simple questions, very exciting prizes plus a mystery prize. And I think with that, we can have our next panelist. I believe it's Peter. He's raring to go. I can see him getting ready. Peter, Betty, back to you. Thank you very much.
All righty, so as you can see on the screen, there is the quiz. So kindly look at that. Alex, could you just pull it up a bit?
Yeah.
No, can we have it up a bit? I don't know if the participants can see the whole quiz. So if you can't see it, kindly let me know on the chat section. Can you see all the questions, all the 3 questions? Righty, I can see. Great. Fantastic. Thank you so much, Alex, for that. Thank you, Alexander. That's quite, empowering. Are you Aliso, Alici, Alisa, Avendo? Alexander can have pronunciations.
Alici. Always the guy who writes the checks. That's an important guy.
So we can try and place ourselves in that descriptions. Are you a specialized supplier? And all these. So what we are trying to do is to learn what happens in leasing, what is good, what are the advantages, what are the disadvantages. Do I want to lease a car? I'm starting to think it's a better option, but let me keep listening. Let's keep learning. So kindly let us know, what is it you've learned? You've learned something from Robert. You've learned something from Alexander. What is new to you today that you have learned and you would like us to know? So let us know in the chat section. Just let's know you are here. You've gotten a benefit today of knowing a new thing that you didn't know, and that really excites all of us. At this point, we have 161 participants, and I'm very glad that you could join us from wherever you're joining us from. You're most welcome. Keep joining, keep inviting your colleagues, and let us all come and learn something together. So thank you, Alexander. Your questions will be coming up. Kindly post all your questions to Alexander. Let him know that he did a good presentation and that you need him to help you with understanding the industry more. Before we go to I will do a questions and answers shortly. But before then, Robert, I'm sorry to ask you this at this point, but could you kindly shortly let us know what are the types of lease? You know, help us understand what types of lease exist and how can we know where to go or which one to think about.
All right, thank you, Betty. Majority of my fellow panelists and all the participants to this webinar, you know, when the word leasing is used or when you hear somebody is talking about asset finance, basically what that means is that it's a combination of different products. One of the oldest one is what the hire purchase, and that is known to most of all of us. If you remember ART, African Retail Trade, which used to give hire purchase if you buy household goods, that was a form of hire purchase. Then from 2002, with the enactment of the income tax leasing rules, the likes of Barclays, and then later CBA, which is now NCBA, introduced other leasing products like installment sale, finance lease, and operating lease. So this lease, you have to decide from the onset what type of lease you want to do, whether it's a finance lease, which is a full payout lease where there is no residual value. And just for the participant, I saw someone asking what is a residual value. And I just want to say a residual value is a value placed by the lessor on a future value of a particular asset. So if you have a loan of say $1 million shillings and the lessor decides to take 15% as a residual value, your repayments will currently be pegged on 850 instead of $1 million shillings. So you end up getting lower repayment plans, unlike someone who takes a full a finance lease where the repayments are based on 100% of the value of the asset. Now, once you've decided you're going either finance lease or an operating lease, then there is another matrix that come in. There is what we call a dry lease. You just leased the asset. For this case, it's just a motor vehicle. The lessor just works out what are your monthly repayments. Then you can decide, okay, fine, I want other services added to it. Can you take care of insurance? That is amortized into the lease. Can you take care of maintenance? It is added to the lease. Can you put in fleet management? That is added. So it starts becoming what we call a wet lease. By the addition of these additional services, then the lease moves from being a dry lease to a wet lease. And then sometimes from now, a wet lease, you can go into outsourcing, where now even the company tells you, you know what, can you even give me drivers for these cars? So that becomes an outsourcing model, where now, you know, you are paying for the asset plus the drivers and the human resource that is behind operating those cars. So those are the different types of leasings that are there. Then that is now on the operational side. Then there's another lease we call a sell and lease back. For example, you already own the assets. A leasing company can come and buy those assets from you, pay you as the lessee, so you get the capital that you are tied into that equipment, you get it for, you can get that money back to use as working capital. Then it is leased back to you over the remaining useful life of that particular equipment. Yeah, so it all starts from whether it's a finance lease or an operating lease, but depending on what is added onto it as additional services, moves it from a dry lease to a wet lease to a fully outsourced model. Over, back to you, Betty.
Fantastic. Thank you very much, Robert. Thank you for breaking it down for us. It's important that we understand that before we proceed. And people don't have a lot of questions in their mind as we proceed. There's someone who is requesting that we run the quiz again. Alex, I don't know if you have it ready, just for a minute or less. Someone requests that we run the quiz again.
Okay.
There we go. There we go. I think by now we've all viewed the quiz, and we can be able to work on it as we proceed. Righty, thank you, Alex. I can see from the charts that we are learning. When we floated when we did the survey before this webinar, an overwhelming 84% of the participants wanted to learn something new. And I can already see that we are learning something new from your answers. Very glad that you've learned a lot from Robert, and very glad that you have learned a lot from Alexander. Keep learning, keep sharing with us what you're learning. And at this point, I would like to float a few questions to the panelists before we have the last presenter. Peter, don't you worry, your part is coming soon. But before then, please let's look at a few questions that we have from our participants. Shalini Popat, what are the benefits of leasing from a tax perspective? What are the benefits of leasing from a tax perspective? And I feel, this question would be tackled very well by Robert or even Alexander. Any of you can answer that question.
Okay, thank you. Betty, shall I go first?
Yep.
Now, primarily, let me emphasize to the questioner, primarily leasing is not for tax benefits. Leasing is you, the lessee, wanting to deliver services in the most cost-effective and efficient manner. So tax aspects of leasing should not be number one. I want to avoid tax. But having said that, if you buy an asset, you pay the entire VAT, as an example. When you lease the asset, VAT is only applicable on the lease installments. So if you have a 10 million shilling asset, VAT is 16%, you're paying 1.6 million in year one. When you lease, that 1.6 million is spread over the 4-year or 5-year lease period. So in terms of that VAT part, you are spreading your VAT over the useful life or the lease term. The second part is, and Robert will chip in on this, Robert Nyasimi, we have been asking for favorable treatment of tax on the leaseor side, because the leaseor owns the asset. So he'll say, this is my asset, but for accounting reasons, sometimes the lessee is asked to capitalize the asset in his books. You can't have one asset owned by two persons. So we've been asking as an industry to have the income tax amended so that it's favorable on the leaseor side as well. So primarily, if you are a user on the lessee side, the first thing is you're saving on, not saving, but you are spreading out VAT on the value of the car that you'll use over 4 years instead of 1 year. Robert, over to you for additional comments.
Yeah, thank you, Alex. I cannot, being part of government or having been part of government, you are avoiding the tax benefit that someone actually gets. Because when, you know, the revenue man imagines that people are, their tax corporation is reducing, then it looks like a leakage. But it is true, as especially in the private sector. There is a tax benefits that depends on whatever type of asset that you lease. Those lease payments that you make are fully tax deductible, meaning they appear like your expenses, like, and that they are treated as if you are rented an office space, you deduct them against your taxable income. So what that it does, where the amounts that you need to charge the corporation tax at the rate of 25, which is the current rate. And by virtue that now your taxable amount has been reduced, by effect, you pay less tax. However, as government, you know, that is a benefit you give to a particular, you've given to the leasing industry to grow that, that part of our economy. But what has it done to government? By virtue that now leasing has happened, and as I said, there's that multiplier effect that happens, yeah? More assets are being bought, the government is making more revenue from other taxes like import tax, excise duty, or VAT, and then as more equipment come in, the suppliers like dealers are employing more people to do services, everybody employed is paying more pay as you earn. So in the sum total, government actually is making more revenue. But it does not mean that as an individual company that took the leasing also gets a benefit by paying less tax. So it is a win-win situation for everybody. The only part that has not happened in Kenya, that especially for individuals, it does not make sense, like even me and any of the panelists and everybody listening to this session, to lease as an individual, because pay as you earn is a check-off system. It never comes to you, then you pay to KRA. Your employer pays it directly. So what you get in your account is after-tax payment. So if you are to lease and you're making a lease payment on an from money that is already taxed, then you can never realize that tax benefit as an individual. But as we become more responsible, more disciplined, and the government can trust that your employer can pay you gross salary, and then, you know, you run down your expenses and you give government what is there, like what happens in developed worlds, then maybe individual leasing motor vehicles or other assets will come in. So that is how it works when it comes to corporation, about tax benefit to companies and individuals. Thank you, Betty.
Fantastic. Thank you very much for that deep insight. You want to say
Betty.
Something, Alexander?
Could I add on to what Robert has just said?
Sure, sure. Yeah,
Robert has mentioned a very good point on the tax benefit to individuals who are salaried employees. Now, in Australia, we have something called a novated lease, where you enter into a lease contract, but your employer remits the installments. Then those lease payments are deducted from your gross pay to arrive at what's called pre-tax pay. So in the example I gave of a Toyota Land Cruiser, if the employer leases that for you, literally the 120,000 comes off your gross pay, then the pre-tax level is after the lease installment. That is a major benefit to employees, reduces their taxes, and that makes individual leasing within a company context very attractive. We are hoping with time, as Robert mentioned, people like the Treasury, KRA can look at that. Thank you, Betty.
Fantastic. So we keep learning just as we wanted to learn from this session. Next question goes to you, Robert. Robert Nyasemi, what type of university degree course should a student take to prepare for a career in leasing?
Wow, that is a good one. And leasing, if you look at it, is a professional course, just the way you have ACCA for the accountants, you have CIM, Chartered Institute of Marketing. There's also a professional course when it comes to banking. It's called Chartered Institute of Bankers. We have local ones that derive their their qualification from the UK exam. Like we have the Association of Kenya Institute of Bankers that is gotten at the Kenya Monetary Studies, and all those kind of qualifications. As we said, is that currently the kind of qualifications that anybody would get is if you have been an accounting student, whether you've done finance or accounting as your major, as a degree, trust me, you have gone through lease accounting, but you got through it as a model, but because you are not practicing it, or wherever you go to most of the organization, there's no leasing, then you really don't get to realize that the education that you just did as a model in university was actually relevant. But when you enter into the leasing space and you try, and you will actually realize some of what you learned under those models become relevant. That said and done, through the Leasing Association of Kenya, we intend to bring an equivalent qualification from that is being practiced in the UK and in the USA, and it's called Certified Lease Professional. So it's a one-year course, just like STCA, that any student can do as part of their degree program, because these days you come out with a degree plus a professional course if you choose that you want to enter into the leasing space. So that is something that the Leasing Association is working with, and hopefully Strathmore, that is hosting us, I've challenged them if they can host that qualification, because this market is growing. If you look at the value of the leasing contracts, they're increasing. The government starts leasing, the county governments are going to start leasing, the region is going to start leasing. So, and we say in the US, the 60% of the economy is driven by leasing. So there's so much potential for any student out there to actually become a professional, to take this professional exam and become a professional in this field, because it's a growing field. Yeah, over to you, Betty.
Fantastic. Thank you so much, Robert. And one of the things that I've realized as we go on with this webinar is that we are provoking questions from the participants that we wouldn't know, in our own small spaces, leasing and doing business and teaching at Strathmore, we wouldn't know if people were interested in doing a leasing course. So thank you very much to the participant who asked that question. We have many questions, but before I would like to break the session now. It's fantastic that we are having great answers. Before then, we have 164 participants. Keep logging in, guys, and keep it here. Send your questions. If you would like it answered by Alexander, by Robert, by Peter, who is coming up next, you let me know. Before we go very long, I would like to introduce our third panelist for the day, the cool man in the room. Peter Wanjala is currently the GM, the General Manager of the Corporate Division at Toyota Kenya Limited. He provides leadership and manages key business support functions of finance, procurement, administration, and projects. He has also undertaken extensive work in corporate governance and risk management in both private practice as well as the industry. He led the team at Toyota Kenya that initiated the first ever vehicle lease to the Kenyan government, which culminated in the successful lease of 1,200 vehicles for use by the National Police Service in 2013. Of course, Alexander acknowledged Toyota, and so you can tell the man, is Peter Wanjala. He has developed compelling systems and processes to manage the National Police Service fleet, whose size has been growing and now stands at, wait for it, 3,220 vehicles. Peter is a board member of the Leasing Association of Kenya, which I would, request people in the transport industry, the ministry, people, if you are leasing, you are in government leasing, you would like to learn more, we all should join the Leasing Association of Kenya and keep learning. So Peter, the floor is yours. Last but not the least, definitely. Welcome and give us your presentation. Kindly unmute, Peter.
Thank you, Betty, for that introduction. And nice to have you here, all our guests, to this webinar. And thank you, fellow panelists, for your very wonderful presentations. As Betty has said, as Toyota Kenya, we did take the first step in operationalizing the pilot project with all its risks and rewards. During the pilot, people were a little bit skeptical whether the program would be successful, including dealers, financiers, and even within government. And I would say it was not smooth sailing from the beginning. However, all the stakeholders, whether it was the National Treasury, the National Police Service, the CMTE, vehicle dealers, financiers, leasing companies, they worked very hard to make it a success. It's because of this that it all culminated in leasing becoming the procurement, the preferred mode of vehicle procurement for government, as Alexander has mentioned. Now, I've been asked to talk about operational management, vehicle user training, and end of lease management. Now, I will base most of my presentation on experiences at Toyota Kenya, where we have already gone through one full cycle. Remember, the pilot project is what is referred to as National Police Service Lease Phase 1. Now, that has already gone through one full cycle from the beginning to the end. NPS 1 ran for 4 years, beginning from December 2013 to December 2017. It was then extended by a further 9 months to September 2018. The three phases that are currently running is NPS phases 2, 3, and 4. So in total, the total number of vehicles leased for use by the National Police Service so far is 4,580. Now, I'll just start by, my focus will be on operating lease. And as you know, operating lease is basically where you rent the use of an asset for a period of time, and in return, you pay the owner of the vehicle a fixed rental for the duration of the lease. Now, what you pay caters for the cost of the vehicle and related accessories, finance costs, service and maintenance, replacement of tires and batteries, repairs, comprehensive insurance, and administration fees. At the end of the lease, you return the asset to the owner. The owner disposes it, and as the user, you still have the option to enter into a new lease arrangement. Now, government lease structure will consist of a form of contract, which is the master operating lease and the service and maintenance agreement. The service and maintenance agreement stipulates what are the minimum return conditions. The owner of the vehicle would obviously expect to rely on the residual value at the end of the lease, make the lease effective. And then you have the contractor, in this case, the National Treasury. You have the lessors, several of them, including Rentco. You have the suppliers and service providers, who are usually the motor dealers like Toyota Kenya. The end user in this case has been the National Police Service. And the form and type of lease is an operating lease with full service and maintenance. Leases have been structured for a period of 4 years with a mileage limit of 160,000 kilometers. Mileage is important to bear in mind because you need to know what mileage is suitable for your use as a lessee. And you need to consider what are the options in case you are a high mileage user. You may be forced to terminate the lease, or you may be forced to allocate more vehicles to high mileage areas, or you budget for the excess mileage penalty. Now, in the case of the government lease structure, insurance is comprehensive with nil excess. So you have the comfort of using the vehicle knowing that everything will be taken care of, including insurance. The lease rentals are payable quarterly in arrears. Now, what are some of the objectives in operational management as far as government lease is concerned? The key thing is that fleet maintenance is outsourced in order to enable the government to focus on its core mandate, which is public service delivery. So everything is outsourced to the service providers, and therefore you as government can focus on what you are good at, on your core business. So the first objective is optimization of vehicle usage and service delivery. Now, under full maintenance lease, the service provider services and maintains the vehicle. The lessee, the observe service intervals. The service intervals are in accordance with what is set by the manufacturer's guidelines. In the case of Toyota Kenya, we are both the supplier as well as the service provider. Now, looking at the National Police Service lease, it has given the police a minimum fleet availability ratio of 97%. In other words, 97% of all times the vehicles are available for use by the police. Now, the previous ratio before leasing took effect was only 35%. And I'm sure you understand that even though the National Police Service is a heavy user of motor vehicles, it has never had so many well-maintained vehicles on the road as has happened since leasing took effect. And of course, this has contributed directly to national security. Now, the second objective is to reduce distances traveled to the nearest service center. Now, as Toyota Kenya, because of leasing, we have been able to set up a wide network comprising of 30 branches, dealers, as well as authorized service centers. Without the advent of National Police Service lease. Now, out of these 30, 18 are authorized service centers spread in various counties. And this has been made possible by collaboration with the local people. We've collaborated with them, we've enabled them, we've helped them to set up these outlets to service the National Police Service lease vehicles. And this has increased wealth at the county level in addition to providing skills as well as knowledge transfer. Now, the other objective is to provide user training. Now, you need to try to train the users on product operation, lease procedures, as well as safety operations. This is very necessary for the success of any leasing program. Don't assume that the lessees, the users, the drivers know everything to do with the operation of the vehicle and how leasing procedures work. Now, in Toyota Kenya, we have so far trained more than 5,000 police officers in leasing, in safety, in vehicle operation. In addition to that, we have established a driver reward scheme to promote good driving behavior, and promote good maintenance of vehicles. Remember, if vehicles are well looked after, they will cost less, both from a lessor's point of view as well as a lessee's point of view. Now, the next, I want to just take you through some of the essential elements to the success of vehicle leasing to government. The first thing is prioritizing the setting up of a fleet management unit at the National Treasury. As Alexander mentioned, we need this fleet management unit centralized, and the best place to get this centralized is at the National Treasury. Now, this will be able to manage and coordinate the vehicle leasing, as well as set clear rules clear ground rules on how leasing will operate. They'll be able to set up or prepare a manual that will guide transport officers, drivers on how to operate leasing. The second element is for the need for government to establish a lease contract prices from various lessors that will be valid for at least 1 year. Then any government agency, any government department, any government ministry interested in leasing would then select its vehicle options from that price menu. Now, this is important because then it saves a lot of the time that would be wasted or taken in long and costly tender processes. Because then if every MDSC has to carry out their own tender processes, it becomes very, very costly and time wasting. Now, we then need to have very clear, detailed vehicle specifications before any procurement process begins. You need to be very clear on what is the vehicle type you require, what is the type of body, what are the additional accessories required, colors, and these have to be communicated clearly at the start of any procurement process in order to avoid any costly changes during vehicle preparation. Now, as my fellow delays in payment of lease rentals would result in lessors incurring additional financing costs. This needs to be addressed as a priority, otherwise it makes leasing unattractive to the lessors and the financiers. Now, what about the ability of the lessor to recover value from the leased asset at the end of the lease term? This is governed by what we call the minimum return conditions, which are part of the contract documentation for any operating lease. So it's in the interest of all the players to make sure that the vehicles are returned within the minimum return conditions to avoid any penalties at the end of the lease term. Now then there's the need for availability of and quality of credit information for potential lessors to understand, assess, and rate and remedy any risks, particularly risks associated with the lessee's credit rating. Now that we are moving more and more into government lease, we expect that some of government agencies, some of the government departments will require specialized vehicles. Now, such specialized vehicles would only be suitable for use by the procuring entity, the user, that specific user. So it's important that such specialized vehicles are considered for longer lease terms or longer lease extensions, because they have a very limited use outside the user entity and would normally have very low uptake in the secondary market at the end of the lease term. Now, I've mentioned that regular driver training is one of the best ways to manage vehicle maintenance costs and accident-related costs, and therefore maximize vehicle utility. Maximize vehicle utility for the benefit of the lessee. And then you have risk mitigation. Risk mitigation tools, in the case of vehicle leasing, the key one is insurance. Now, of course, we know that government does not ordinarily insure its vehicles. And for us to bring this concept to the National Police Service, it took a bit of a while, and it took quite a bit of training for them to understand that these vehicles are insured, and therefore in the event of an accident, you need to make sure that you submit documentation, proper documentation, and documentation submitted in time. Now, otherwise, if you don't do that, then it could affect the eligibility of a relief car, or it could delay the commencement of any insurance accident repairs. So it's important that the users are aware of this. Now, I'll then move on to end of lease management. The current master operating lease agreement with the National Treasury states states that the lessee shall at its sole cost and expense return the vehicles to the lessor within 7 working days after the end of the lease term. Thereafter, a late return penalty is applied on a daily basis. The 7 days is like a moratorium period, which allows the user of the vehicle to return the vehicles. If it's from Wajir, if it's from Mandera, the vehicles are then returned centrally in Nairobi. And 7 days is given free of charge. Now, once the vehicles are returned, they are inspected in accordance with the Master Operating Lease Agreement, and an inspection report is prepared. You, as the user of the vehicle, of course, have to agree to the report. You have to agree to the condition that the vehicle has been returned in, and you have to sign the report. Ideally, what we are saying is that the inspection should also be attended by a representative from CMTE, the Chief Mechanical Transport Engineer. Now, the inspection report then would form the basis for confirmation of return conditions and confirmation of the end of term mileage. Remember, any excess mileage over and above the limit is charged. Now, the lessor then has their vehicle back, and they will carry out a market valuation of the vehicle for sale purposes. Now, as market practice, the lessor may offer the lessee the right of first refusal. And the sale of the vehicle is then done on a willing buyer, willing seller basis. Now, before I conclude, just to give our lessees and government that we also have the Leasing Association of Kenya, which is the umbrella association of leasing practitioners in Kenya. Now, the Leasing Association of Kenya's mandate is to create a sustainable leasing industry, set guidelines and standards, set awareness, as well as provide a code of conduct. Now, this is very critical for the market so that you as the buyers, you as the users are fully happy that there's an association that takes care of your interests as a user and as a customer. And at that, I will end my presentation. Thank you very much for listening.
Fantastic, fantastic. Thank you so much, our GM at Toyota. Thank you for the presentation. I've actually realized that you've answered quite a number of questions. People had already started asking about how to manage the lease, user training, but I can tell that some of the questions are already answered. I would like you to answer just one question before we can call it a day. This one I saw, how do you manage drivers and people who use the vehicles? People who use the vehicles not in the very best of way. And I would like you to give us a few insights. I know you talked about driver reward and you talked about, training. So how has it been? How can you help? What is one best practice that you practice at Toyota that you can give to us, those who lease vehicles, to help our drivers so that they don't mismanage the vehicles?
I think the first thing, as I've mentioned, is just the awareness. Awareness that if you treat the asset well, then the asset will last longer. But also awareness about the operations of the asset itself. Vehicles are becoming more modern, and therefore we need to help users keep up with the times. And that's why leasing becomes even critical, because leasing enables the user. But also just promoting a culture of good driving through the rewards program. We've already rewarded some of the good police drivers over the years. What we are also saying is that the fleet management unit at National Treasury should also set the guidelines. The guidelines will also help to give rules pertaining to how drivers will be surcharged for any misuse of the vehicles. Our experience has been that because there are no guidelines, some of the drivers have been arbitrarily surcharged and even unfairly. And therefore, we need to develop this very clearly so that everybody is very happy that this is something that is fair to all. Thank you.
Fantastic, fantastic, fantastic. So the last one question I would like us to tackle, I know our time is almost gone, but it's important that we answer the questions. There is a question from Dennis Openda. Hi, Alexander, what role can the media play in government leasing? He is Dennis Openda of Nation Media Group. Alexander, in a minute, could you kindly help Dennis understand what role can the media play in government leasing? Unmute, Alexander. Unmute.
Yeah, can you hear me now?
Yes.
Can you hear me?
Yes, yes.
Yeah, thank you, Betty. To the media question, I've already answered it on the chat, but I'll repeat again. The role of the media is always to keep those in power in check, to always have some oversight role. So yes, the leasing story, go to the field, look at the leases, look at how the assets are performing, do your work as normal media. There's no need for media to drum up arguments for or against leasing. Simply report what are the facts on the ground. We'll be happy with that. And I believe, Betty, that will be enough for this session. I already answered it on the chat.
Fantastic, but it was also good. All righty. Thank you very much for that. We are going on well. We still have our 160 participants. Kindly, you want to say something, Robert? All righty.
Yeah.
Yes. I wanted just to add to what Alex is saying into the role of media. And this is what I would kindly request media, is that, you know, there's this perception that has been created about leasing and in the Kenya, especially, you know, Anglo leasing and most currently in regards to the managed equipment contract for leasing of medical equipment to level 5 hospitals. If the media could also reach out to, say, the leasing association, sometimes when they write some of these stories, they can actually be guided in terms of how leasing works, so that leasing as a product is not killed by just that negative press that has just come out because of a particular project. I believe if you're knocked down by a car, maybe it's another car that will take you to hospital. So leasing is good for this economy. Reach out to the practitioners, try to understand, because sometimes you get the way leasing, sometimes the media report how expensive leasing is, and they do it in absolute terms. For example, they say, okay, fine, if you're paying 30,000 for 4 years, how much is that? Not realizing the 30,000 that you're paying includes interest, maintenance, and all those things. So then they get the cost of the total lease is say 1.5. And they say, okay, I would have bought this asset for $1 million. And then they say, you know, leasing is expensive because over 4 years, this is what I'll pay, without taking into effect the net present value or the time value of money and what does the lease constitute. So it gives bad name to leasing. So if they can engage us, they can engage relevant people, they can always have a rejoinder to some of the things that they report out there. Thank you, Betty.
Fantastic, very well answered. Gentlemen from Alexander and Robert, very, very well answered. I feel it would be fair to ask this question to Peter Wanjala, because we are here to give all sides of leasing. We are here to help people understand leasing, the good, the bad, and the ugly, isn't it? And so this question, it's the last question I'll read. The rest of the questions, we are going to answer them and send them to you on email. But Peter, help us answer this one. Is there economies of scale to both the user and the leaser? And are there major risk factors associated with leasing?
Yeah, economies of scale, of course, from as Alexander has mentioned, in the sense of the bulk discounts that you obtain from leasing, you're able to get many vehicles. The rental is fixed and determinable, so obviously it helps you in your cash flow management. What was the risk associated with?
Yeah, are there major risks associated with leasing?
From a lessor's point of view, I think the two major risks are the depletion in the value of the asset, as well as the credit risk associated with the lessee. I think that those, I would say, are the two main risks. I think the lessee is perhaps sits with lesser risk, because all that the lessee is doing is to enjoy the use of the asset, and just to be able to provide the cash flows required to pay the fixed lease rentals.
All right, thank you so much for helping. Yes, Alexander.
Can I chip in? Peter's made a very good point. Let's be clear. Leasing is also a risk transfer mechanism where the lessee, in this case, say government or a company, transfers most of the risks to the lessors and other people. So it's a risk transfer mechanism. And one other point that I want to emphasize on that, if you as government stays with the vehicle, then all the risks are on your side. And finally, the financing risk that Peter mentioned, government within the domestic market is deemed to be risk-free. So if you're an MDA, if you're government or the National Treasury, we are deemed to be risk-free, AAA rated within the domestic market. So that's why government is very attractive as a customer. Thank you.
Wow, thank you so very much. And at this point, I want to really thank all of you guys for participating. In the next few minutes, we are going to have a surprise, which is going to be done by our host, Toyota Kenya. But before then, I just want to give 30 seconds to Robert. Robert, can you say something in closing?
Thank you, Betty, and thank you to all the participants and my fellow panelists for participating in this, and thank you, Toyota, for this opportunity to share this stage with you. That shows you the confidence you have on Rentco as a partner. I'm always eager to share my insight and my experience that I've gained out of practicing leasing. I've sat on both sides of the fence. I've worked in the bank for many years, so I have the lending experience, and then I'm on this other side now where I'm a customer to the bank. So I'm able to bring quite a lot to the leasing space. Somebody asked whether we can do other webinars in regards to agriculture and oil and gas. And I can confirm there are plans to do that. We intend to do a webinar on Lease to Learn program for learning institution in partnerships with Lenovo, HP, and Dell. Hopefully with Toyota, we can do a similar one targeting county governments, because that is another space that I see that we can target. We can have a webinar on agriculture. You have the case tractors. Again, we can build on another webinar where we can look at farm mechanization as a solution to agriculture in Kenya, and also as a target for Vision 2030. So there's so much. You have to remember that leasing is money. So whenever there's money, there's solutions. So that's how I want you to, I'm just breaking down what leasing is. Leasing is a form of financing. And whenever you finance an asset, there is an outcome out of that financing. So the opportunities are huge, and you know, I'm looking forward to engaging you further. Thank you, Betty.
Thank you. Thank you very much, Robert. 30 seconds, Alexander, in closing.
Mine is very quick. Mine is to say, leasing makes value. That's why it's global best practice across the world. Very leading jurisdictions, Australia, America, Canada, have said you must lease. And our head of public service has made that policy. So leasing is policy in the public sector. I want to share with Robert, one of my fellow panelists, there's a need to transfer or to make leasing accessible to SMEs. So for me, the greatest opportunity now is to make SMEs adopt leasing, because SMEs can't access finance easily. SMEs don't have collateral. This is a financing agreement that also gives you the collateral you need. So Robert and I are very happy, would be very happy if we can get SMEs more into leasing. Maybe the GOK can use my expertise to sort out the tax part of it, because SMEs are very tax sensitive. But that would, for me, be the message we need to take away from there. Let's not just have the big fleet owner like government leasing. Let's also have SMEs leasing. Let's also have the counties leasing as well. Over to you, Betty.
Thank you. Peter Wanjala, 30 seconds.
Yeah, first of all, just to thank SBS Rentworks as well as Alexander for partnering with. Sorry?
Rentco.
Sorry, Rentco. Sorry, my apologies, Robert. Rentco, SBS as well as Alexander for partnering with Toyota to present this webinar. We are always available to respond to any questions that you may have going forward. I think for me to say is that we know that in Kenya, we still have a huge investment gap. I think we are told that the investment gap is almost 11% of our GDP in investment in capital items. And leasing is the best initiative to fill that gap. Now, as Toyota and with my other fellow stakeholders, we've already taken the first step to make this happen, and we really hope that everybody will come on board and take the second step. Thank you very much.
Fantastic, fantastic. So to all our participants, we really want to thank you. This is the best session for the webinar. This is what we are waiting for as well. So Alex from Toyota, could you kindly help us with the raffle section? All righty, and there we go. We have round 2 of gift vouchers. We have our winners, Timothy Munyoki, Shalini Popat, Ruben Mahoha, I hope I said that correctly, and Enoch Omwansa. You guys have won yourself some shopping vouchers, 2,500 in value. Toyota will communicate how you get that done. Next session, Alex. And at this point, I would, yes?
There are 2 Alexes.
Oh, Alex. There's Alex from Toyota.
Okay, thank you. Thank you. We'll be running the quiz shortly. 30 seconds per question so that we'll be able to see whether there was any retention.
Yeah.
So the first question coming right up should be on your screens. Participants, please select a response. Five seconds. Okay. Question 2. Five seconds left. Thank you. That question. 5 seconds. Question 4. Five seconds left. Question 5. Five seconds. Question 6. Five seconds. Last question.
Okay.
Five seconds left. So last question is just to know who wants to get a certificate of participation. Five seconds left. Thank you very much.
Thank you very much, Alex, for the quiz session. Thank you for the poll. We really appreciate that. And I would call upon you right about now to give your vote of thanks from the host's side. Please thank our participants and give your vote of thanks.
Okay, before I give my vote of thanks, let me announce there was actually a prize for that quiz that we did.
Oh, yeah.
So
sorry.
Sorry, I'm trying to move my screen. Yes, so those 7 questions, we'll be reviewing them later in the day, and there'll be a cash prize for 5,000 shilling voucher for the first 3 answers, correct answers. The quiz is open to all members of the public except staff of Toyota Kenya Rentco and Strathmore Business School, as well as anyone with in leasing or finance sectors could participate but does not qualify for award. So we'll be announcing the winners on our social media channels within the day. Yeah, and let me give the vote of thanks on behalf of the session sponsors, Toyota Kenya. We are very glad that all the 160 of you were able to join us today for this engaging session on leasing and how it can help propel our country forward. Many thanks to very good engagement from our panelists, Alexander Wino, Robert Nyasimi, and Peter Wanjala. I think I've also learned something despite having been in the industry for a number of years. So thank you for that very good presentations and response on the Q&A. I think a lot of questions were also answered on the Q&A as we were proceeding. Thanks also to the participants from all kinds of organizations within the country and outside the country. I believe you've been able to learn a lot. We thank you because without your participation, the webinar would not have been a success. So we'd like you to keep tuned in to our next session so that we're able to propel this agenda forward and realize the benefits of leasing as a country. Thanks also to Strathmore Business School, our partners in this event, and Rentco Africa. I believe this partnership will definitely enable us to arrange more sessions and benefit many more people, considering there's no formal training for lease, as it were, in the country. So we need to start it at our level. So we'll be sharing the YouTube link of uploading this webinar on YouTube within the day. We have a hashtag trending, GOK vehicle leasing. So as you comment on our social media handles, both Strathmore, Rentco, and Toyota, please use that hashtag GOK vehicle leasing to be able to spread awareness about the topic. We'll also be sharing the presentations to your emails. All those who registered, the presentations from the 3 panelists will be shared to your email within the day. Otherwise, thank you very much. Thank you, Betty, for a great job. And thanks to all the teams, Strathmore, Rentco, and Toyota, all the teams behind the scenes who made this event a success. Thank you, and we look forward to engaging with you further.
Fantastic. Thank you so very much, Toyota Kenya. Thank you, Eric. Thank you, Alex, on behalf of Toyota Kenya. And so at this point, my name is Betty Mwaura. I am the Academic Director, Fleet Management at the Strathmore Business School. It was fun moderating this event. It was fantastic having all the participants joining us from different parts of the world, different parts of the country, and from different companies, different government agencies. We saw you, we appreciate you, and we really, really thank you for participating in this event. I saw some of you who were in our last week's webinar, the Fleet Managers webinar. You also, came here and logged in and you are with us. So thank you for joining. Thank you, because we've also learned a lot from you. We would ask that you help us, make this go viral. Use the hashtag that Alex has shared with us. Keep sharing this information. When we give you the YouTube video, kindly share it out with other people. Like our channel, like our social media handles, SBU, Strathmore Business School, and Toyota Kenya on Facebook, on Twitter, and other social media pages. So we really appreciate you. We will keep engaging. We will keep informing you of future plans. We don't know what comes up. Strathmore, we deal with training. Toyota, you see what they do. Rentco, we'll let you know. Alexander is here with a lot of experience. We will plan something and definitely we'll let you know what comes up. So on behalf of Strathmore Business School, we really appreciate you. And please don't touch that dial. That's how the certificates of participation will look like for those who voted that they would like to receive one. And in a minute or so, we are going to play you a very short video. So I want to say thank you for coming. Thank you for participating. I'll see you. We will see you in another webinar, or in another conference, or in another workshop. So adios, and thank you for participating. Don't touch that dial.
As we lay the foundation for greater partnerships in future, in my view, it is very important for us to have these opportunities where we can connect with you, receive your feedback, and which will help us improve what we offer, and the feedback then goes back to manufacturers who are actually also here.